The Philippine Stock Exchange kicks off trading this Wednesday. The local bourse opens at 66.15 and will attempt to recover from its slump in the previous sessions. Now, Gabryle Aguila of Unicapital Securities joins us for his trading guidance for the middle of the week. Hi, Gabryle. Welcome to Market Edge.
Hi, good morning. Happy to be here.
All right, let's talk about inflation first. For April, it wasn't as bad as expected. Now, is the market happy with the latest numbers? What showed in the way sentiment is right now at the PSEI when it comes to the latest inflation print?
Inflation coming in yesterday at 3.8% in our view was quite positive, being on the low end. Market reception has been lukewarm so far. I think we finished a little bit of a contraction yesterday. Up until now, we're just trading nearly flat so far. But I think most of that is attributed to the anticipation of first quarter GDP figures due for tomorrow.
Yeah.
Putting two together would be what would definitely catalyze market sentiment to a more certain direction.
All right, Gabriel, you know, inflation will remain elevated. That is anticipated, at least for this quarter and next. Now, are we likely now to miss this year's target for inflation? Is that being priced in by the market?
Target for inflation is for inflation to be at around at least 3.9 to 4.1%, at least for the first half of the year. Going into the second quarter, we're actually going to be entering a low base period to the first low that it had last year by July at around 4.7%. So the lower base does give a little bit of a risk for a higher inflation, especially with inflationary pressures going on. But so far, fortunately, we are staying below the 4% target, or 2 to 4% target band by the BSP. And it's for us quite positive, and we're still maintaining our view of positive outcome for the year.
And I don't know if investors also feel that way. If you look at the stock market now, trends from last year, in fact, were started strong and then fizzled out towards the second quarter and range traded, at least for the last quarter where trades and prices eventually picked up. Now, so far, the last 4 months this year seem to mirror that kind of pattern. How likely are we to achieve now the same finish in 2024 given that trend?
Compared to last year, things are quite different now. Last year, we were still going through the peak of inflation. We were still having rate hikes by the BSP and the US Fed. And there was a lot of uncertainty on how high interest rates would go, given the trajectory of inflation at that period. For this year, more of a retracement comes at an uncertainty of when rate cuts would be.
Yeah.
But as far as the trajectory of heading towards rate cuts are going, yes, we are heading there. So in terms of weakness this year compared to last year, this is more of a sequential correction. And we still expect a positive finish for the PSE towards the end of the year, especially as rate cut views begin to reappear in the horizon.
All right, positive end. And how positive is that? I mean, we've spoken to some analysts. The consensus, of course, is 8,000. How far are you from that number for 2024 PSEI finish?
Going into 2024, we were actually looking at the current risks considered. And we know that there is a possibility for an 8,000 view, but we have our target at least 7,200 for the PSEI this year, which we nearly almost achieved already in the first swing of the rally this year, near 7,000 points. But that is contingent to rate cut timings getting more certainty as we move from the month-to-month outcomes of inflation.
All right, let's look at the market right now. You know, the bourse is up about 5% again from the recent rallies, gains, and the fact that we wipe out a lot of those gains in the past 3 months. Now, are investors likely to pocket profits now at these levels, at these current levels? How does that impact direction short term for this market?
Currently at the 6,000, we're treating the 6,400 to 6,600 levels as the support. Okay. We see investors pocketed gains earlier last month when the index started tipping at 7,000. For us, what could possibly bring us to a lower end of the 6,400 range, which we think would be a good point of accumulation, would be a little bit more prospects of delays for rate cuts or inflation for May and June periods to be higher than expected. But otherwise, should we get proper outcomes from the two, and we have a better view on rate cuts towards the end of the year, which we're currently estimating the fourth quarter of 2024, this would be, for us, a good time for accumulation.
All right. Now, as far as investors are concerned, the latest inflation print came out yesterday, and another thing to look forward to or dread is the GDP figures. These are due out tomorrow. What are your expectations for GDP? How much do you think did we grow last quarter?
Well, so far this year, I think we're definitely the expectation from late last year is less now. We're looking at around 5.8 to 6% for the first quarter of 2024, which we still think is decent growth for Philippine GDP, given the current headwinds that we're currently going through right now.
And are you seeing GDP now significantly tempered by high borrowing rates? We know for a fact that these rates are here to stay for longer.
Relative to the original target of the government of a 6.5 to 7.5% growth, yes, there's a little bit of tempering in terms of GDP growth. However, again, if we're looking at it at around 5.8 to just 6% on that lower end, there is still some decent growth that's getting logged in. And we're seeing it that despite the high interest rate environment, we are seeing decent growth coming out of Philippine GDP. It's also being reflected by the first set of earnings that are coming out for Philippine corporates, that we are still going through a period of growth despite the headwinds.
All right, Gabriel, the jobs numbers just came in. It is up 3.9% in March versus 3.5% in February. How much of an indicator is this of a slowing economy, the latest rise in jobless numbers?
Well, right now, I know that our numbers are still higher than last year. So we're not still looking at it as a slowing economy. We're looking at it as just the ebbs and flows moving into the summer season for the year.
All right. Lastly, what is your trading guidance for the market in the remaining trading days of the week?
Remaining trading days of the week, as we go through support levels where we're now currently looking at potential catalysts for the Philippine GDP. For us so far, it's been positive with inflation. Given that we are moving on a month-to-month basis with inflation outcomes relative to rate cut guidance, some points of profit taking would come when we start to hit resistance. So accumulation at the low levels and a little bit of profit taking as you get good returns while we're still awaiting the next market development on inflation.
All right, Gabryle Aguila, Head of Research at Unicapital Securities Incorporated. Thank you so much for joining us this morning.
All right, thank you.